So today we are going to decode market divergence, dollar index, US indices, and the Indian markets. Hello everyone, this is Shilpa Raidas and a very warm welcome to Midweek with Indiacharts. And we have Jay Vora with us as always. How are you doing, Jay?
I'm fine. How are you?
I'm doing very good. Thank you so much. So, Jay, we have all these questions buzzing through our mind all this week, and we are really curious to ask you. So, I'm going to start right away. Yeah. We have been seeing some diverging trends in the dollar index and the US and INR. Could you let me know what you think of it? And what's your outlook on the US indices, Jay? Do you see any clear trend anywhere?
Sure. So I'll quickly share my screen. So yes, this thing has been very amazing that dollar index has been going down, but USD INR, that instead of going down, it has rather depreciated, and that is a bit diverging move, and that is a bit puzzling. So wait, I'll just open USD INR over here. Sorry, I'll take the spot rate. So yes, so you can see over here that USD INR is very much firm and it is trading sideways, right? But when we look at the dollar index, that has corrected recently, right? Typically, when the dollar index corrects, the Nifty, the USD INR, in this basically INR appreciates, which means that this pair will go down. Okay, but on the contrary, this has held up very well. Okay, so right now the thing that we are watching out very closely is that whether it breaks this range or no. So on the upside, I think around 83.50 or something, that is the highest point. Okay, if that breaks on the upside, then I think USD INR is setting up for a big move in the short to medium term. So this is one, diverging trend. Frankly, why is it happening? I have no clue. But, this trend is diverging. Okay. This is telling us something and we need to concentrate over here. So this is one thing that we are watching very closely. Now, the second question that you asked is that, how are things looking up in US? So when we see the S&P 500 index, that has been very resilient lately. And, we have discussed a couple of times as well in the past that this more or less this rise appears to be a corrective move. Now, what does a corrective move means is that it is basically a counter trend move, which means that if the established trend is on the downside, then the counter trend move will be opposite to the prevailing trend. Okay. So I think that the prevailing trend on the, this was clearly down. Okay. Then over here, till the time it did not overlap, there was a hope that, it might be 1, 2, 1, 2, and it will continue to go on. It will be 1, 2, 3, 4, and it will move up in 5. But what has happened is that, this high and low has overlapped. Okay, which has made this rise corrective. Now, the question is that, have we topped out over here, or will this rally which we have seen recently, will it go up a bit and only then falter? So that is a guessing game right now. Okay, and we are watching the cues very closely. So what is something that we are watching closely? Okay, and for that, the answer is CBOE VIX. Now, to the people who don't know what is CBOE VIX, so just like the way we have India VIX in for Indian indices, okay, to gauge the volatility. Similarly, in the US, we have CBOE VIX. When the CBOE VIX goes down, it tells you that people are very complacent and people think ke sab kuch theek hai, everything is fine. So basically, this index goes down when there is low volatility in the market. Low volatility in the market happens because people are certain about things, okay, which means that there will be no surprises, and that is why this index goes down. Now, in the past, what we have observed is that, we have discussed a bit about the DSI reading, okay, which is the daily sentiment index. So what daily sentiment index tells you is the sentiment of people towards a particular instrument. Right. So in this, if we see the volatility index over here, it is 12% bullish. I mean, the reading is 12%. That means that only 12% of the people, okay, think that the CBOE VIX is going to go up. Rest all the people think that it is likely to remain on the downside, which means that there will be no volatility or very less volatility. Now, something of similar sort had happened somewhere over here as well. Okay, somewhere over here. So basically the reading was 910, and we were kind of ignoring, because over here, especially for many days, the readings was 10, and because of which we had also seen that the S&P 500 was moving higher. Okay, it was only when the reading started to inch higher, basically the volatility index started to inch higher, that's where we saw the correction in the S&P 500 index. Now we are sort of in that setup. Okay, it is just that price wise we don't have any confirmation yet, so that is what we will watch out for. So that will kind of give us the confirmation whether are we going to turn around from this point, or we'll go higher and then turn around. Okay, but we have been discussing the weak macros which we are seeing in the data. So I think that firstly, there is going to be a Fed policy, in the first week of December, I guess. So over there, most likely it is expected that there won't be any change in rates. Okay, so they will neither hike nor they will cut. And it seems like the Fed has done with hiking the rates. Now, in the past, if you hear the Fed speech very closely, they had said that they can afford to keep the rates higher, because then they have that leverage basically to cut and spur the economic activity. But if they do less of the rate hike, okay, and then inflation comes back again, then they will find it very difficult to tackle the inflation. So they had clearly mentioned that the risk of doing less, means in this case the risk of doing less of rate hike is lot more when you do the rate hiking much more aggressively, because when we do much more aggressively, it does slow down the economy. Okay, but then they have the lever to basically cut the rates and again spur the economic activity, right? So over here, they have repeatedly mentioned that. So which is why I think that they will keep the rates higher for longer, which they are saying, but to the point where something breaks and they will have to then start cutting. That's where they will have to start cutting the rates very aggressively. And we are seeing that somewhat in the yield curve as well, where 2 and the 10 year, broadly the trend has been now upward. So the 2 and the 10 year had gone to -100, which is now, hovering somewhere around -35, -40 or so. Typically, when this spread actually comes to zero, or it comes above the zero line, or it comes into a positive territory, which means that the rate of the 2 year, which is the yield of 2 year note, is below the yield of 10 year. Okay, that's where typically markets have seen correction in the past. So in I think last I think 1 or 2 weeks prior, we had discussed about this. Okay, so people who haven't seen that video, they can possibly see that video. But we had discussed in length about the yield curve and why is it important to monitor. So those all things, when you combine, it seems like the US should the US economy should slow in the coming months. If there is a weakness in the economic activity, eventually it may result into dent in their profitability as well. And if the profitability gets hit, there will be a hit on the PE as well. So at this point of time, S&P on a trailing basis is, I think, trading somewhere around 22 or 23 times, which is much above its average of around 17 to 18. Okay, so that's where there is this gap of a PE derating as well, which I anticipate that it will happen once we start getting the signs of slowdown and the profitability getting hit. Okay, so that was on the US indices. So broadly, maybe in the near term there can be some bit of positivity, but eventually things look a bit bleak. when we look at the overall picture. Now you asked me that a place where we see a very clear trend. I think for that I'll have to tell that gold and silver are very interestingly poised. Okay, because when we see gold in the past 3 years, it has literally done nothing. Okay, and it has fooled people each time. While it looked like that it will break out from this range, every time it tries to break from that range and it again goes down. Okay, but this time I think the setup looks very good, because in this correction, basically the RMI, which is a proprietary indicator, it has come back to the zero line, and now it is again giving a bullish crossover on the weekly chart, which means that just like this was one cycle, okay, after a bullish crossover that we saw, similarly such cycle should also now start, in my opinion. Okay, so if that happens, then this is where we have a clear trend. And also when we do a multi-time frame analysis, which means that when we look at the monthly chart over here, you see that the average is holding out well, okay, which is the 40-month average. You see the indicator in a bullish mode. Then weekly chart I already showed you, which is in buy. And now when we look at the daily chart, okay, so daily chart is also, I think we got a bullish crossover just a day back, which was yesterday. Okay, so over here, I anticipate that once this high is broken, I think, which is of $2,009 on the gold spot, that is XAU to USD. Once that breaks on the upside, I think it is headed higher, because this, in my view, was an impulse move. Okay, it had 9 legs. Now when it is an impulse move, it means that the direction is on the upside, because the impulse have formed on the upside, right? So that is why I feel that the direction is on the upside. And once the high of 2009 is broken on the spot, that's where we will see wave 3 unfolding. And even if we do the equality level of that, this is something that we had published in to our Indiacharts subscriber as well. So once the high is broken, that's where we can see gold rising higher to $2,140 eventually. And if that happens, then what it means is that we are going to see a breakout from a very broad consolidation, which we are seeing from this past 2 or 3 years. So this broader consolidation will break on the upside, and that will be bullish for gold. Now, similar is the chart for silver, but yes, silver has been a lot more, quiet than gold. Over here, basically, whenever the correction happens, the corrections are much more deeper. Okay, but we are having a similar thing, that the cycle is complete and now possibly a new cycle could be starting. Okay, so over here as well, we can expect a good up move to start in silver. And also when we look at the daily chart over here, on a lower time frame, so here as well, this rise was an impulse. Okay, though it looks 7 legs on the daily chart, but this leg was, this rise was an impulse when we count on the hourly chart. Then there was a correction, then there was an up move, then there was a small correction over here. So broadly, it appears that this is 1, 2, then this is within a larger 3, this is 1, 2, and now 3 of 3 should start. So that again indicates that the trend should be up over here. So, right now we are facing a lot of uncertainty and we are seeing a lot of diverging trend, but gold and silver is one pocket, where it appears that the trend is very clear and we should be seeing a good up move in the days and the weeks to come.
Okay, that's wonderful. Thank you for the clarity, Jay. I would like to also ask you that we are also seeing a diverging trend between the Nifty, the Bank Nifty, mid cap and small cap indices. Yeah. So how are you reading this divergence, Jay?
Yes. So yes, this has been a bit puzzling as well, because when we look at the Nifty Bank Index, okay, and let me put the Bollinger Band also over here. Yes. So when we look at the Bank Nifty weekly chart, okay, what it has done is that it has taken resistance at the 20-week average, okay, and it has formed a bearish candle. Now, I think that this negative close indicates that a counter trend rally, which we saw for 2-3 weeks, that is getting over. And if that is getting over and the counter trend rally is basically getting complete, which means that it should start its next leg on the downside. And even if we see like the broader wave counts, something got completed over here, then this was W, this was X, sorry, this was X, this was, sorry, yeah, so this was Y, this was X, and now eventually wave Z should come on the downside. So this is what our anticipation is. This thinking of Z eventually coming down, that will be negated, at least for the time being, if the recent high of 44,420 is broken on the upside. Okay. But if that is not broken on the upside, then there is a good chance that the low will be revisited in the days to come, and we will probably go lower. Okay. Now, Bank Nifty is a major part of Nifty index, right? It has some weightage somewhere around 35% to 40%. Now, the fun part is that Bank Nifty has weakened, right? But when we look at the Nifty index, you see no signs of weakness over here. So, basically it is telling us that either of them is wrong. Okay. Either Bank Nifty has to come higher or the Nifty has to go lower. The pattern in the Bank Nifty is actually a lot more clearer. Okay. So that is where, we anticipate that there should be eventually a cool off in the Nifty index. As of now, on the hourly chart, we are seeing some sort of triangular structure in the short term. Okay. Firstly, we need to see whether this triangular structure that we are seeing basically over here, okay, whether it breaks out on the upside or no. And if it breaks out on the upside, then can it sustain or no is something that we need to see. But yes, in terms of price action, the Nifty so far is not showing a weakness because it is consistently taking support at this blue line, which is the 40-hour exponential average. So this blue line, 40-hour exponential average, that needs to be broken on the downside. And that's where we will have a bit of a confirmation that things are cooling off and the Nifty chart structure is weakening. But as of now, that is not there. So we are watching this divergence between the Nifty and the Bank Nifty very closely. And, add to this fun is the small and the mid cap index, which is, which were on fire until I think 2 or 3 days back, where at least the Nifty small cap index has given up. Okay. Now, when we look at the Nifty small cap index, in terms of overall structure, I think we had discussed this earlier as well, that this was wave 1, this is wave 2, this is wave 3, this is wave 4, and currently we are in 5th wave. Okay. Now the whole question arises whether 5th is gonna end over here or will it further extend. So that is something that we will see as things unfold. But as of now, when we look at the daily chart, there is a clean 5-wave rise that we see over here. Now that has got completed. Okay. If that has got completed, then there should be a retracement of this 5-wave rise. In which case, we'll see how the Nifty small cap index behaves around the daily averages. If this gets broken on the downside, then that will be a furthermore confirmation that a larger 5-wave rise, which we had seen, I think, probably starting from June 2022. Okay, that bigger 5-wave rise will get complete. And if that is complete, then, we are again going to get a multi-week or a multi-month correction. So, we are at an interesting point right now where it appears that things are rolling over. Okay, but we don't have the confirmation yet. So we need to wait for some confirmation, especially for the small cap, because when we look at the mid cap, this is like a crazy chart. This is 15 days of up move. I haven't seen so far 15 days of consecutive up move. Basically green closing is 15 days of consecutive up move. So at some point of time, even this has to, cool off. And when we look at the broader counts, again, this is very similar to the small cap index, where the entire rise is a 5-wave rise. So yeah, the marking over here is 1, 2, 3, 4, and this is fifth. Now again, the question will arise, can fifth complete over here or will it extend, something like that? So that we'll see. But at this point of time, we are taking each leg at a time, which means that if a 5-wave rise completes over here, there will be a pullback. What it does around the averages will be very important. If the averages break on the downside, then that would be a signal that this entire move could be getting over. Okay, so I feel that mid caps are probably at a very late stage of an up move. So this is something where we have to be very careful. And let me remove the bands. And if we actually look at the long-term channels for the mid cap index, okay, so you will notice that after 2009, okay, it has been rising higher in a channel. So what it means is that each time it comes towards the upper end of the channel, it goes through a multi-week or a multi-month sort of correction. Right now we are probably hitting that mark. So does it roll over from here or no? That needs to be seen. If we look at the wave counts, if we look at the macro scenario, everything, it does point out towards that. But basically, we'll need to wait and see, and we'll need to basically have a confirmation whether things are really turning around or no, whether things are really rolling over or no. But yes, there are definitely risks that prevail at this point of time, which the investors need to be very careful. So, broadly to sum it up, we are seeing strength in the mid cap index. Small cap index is weakening. Okay. Mid cap, the Nifty index is somewhere in the middle. I mean, it hasn't even broken above its previous high, but at the same time, it is not breaking down. So over there, we don't have much signal. But Bank Nifty is the one where, which is a lot more weaker within this 4 indices. Okay, so we have all these key indices all over the place, and we need to see, in which direction will this puzzle solve. So yes, so broadly we are in an interesting time, but there should be, some degree of caution that needs to be maintained, at least in the near term, once we get some sort of price reversal.
Okay, wonderful. It's an interesting time, but we need to be cautious. Thank you for explaining that, Jay. Further, I would like to know, is there any important observation in the sentiment data that is there on strike, Jay?
Yeah. So one of the things, which I wanted to discuss, which I think was very interesting, was that, see, in the past, what used to happen was that whenever there was this short covering rally, okay, the FIIs used to cover their short positions very significantly. Okay. This is the only time which kind of reminds me of this, wherein despite the market rising higher, the shorts were not getting cut. Okay. And which was puzzling, that why is it happening so? I mean, why aren't they covering their short position? Because then eventually it made a lower low. Okay. Now, something of this sort could be possible, but the reason why I would like to wait and watch is because the expiry is getting over next week. So post expiry, how will they position themselves is something that we need to see. But yes, as of now, despite we have seen this 1,000-point rally from the bottom, the FIIs have not covered their short position. And this is something very surprising and interesting to see, basically how things unfold. Okay. Now, when we look at our proprietary indicators like the daily swing and the average swing, okay, so just for the benefit of our viewers, let me explain this, that a swing reading is basically the buy signal and the sell signal of the RMI, which is our proprietary indicator. Okay. When the number of stocks, so in this case, basically the basket that we are taking is FNO stocks. So if in this 180 stocks, which is there in the FNO universe, the number of stocks which are there, which are rising higher, in terms of RMI, which is a proprietary indicator. Okay. So then this reading will show, accordingly those numbers. At this point of time, the 44 reading that we are seeing on the daily swing indicates that there is only 44% of the stocks where the RMI is rising. Rest all, the RMI is falling. when the RMI falls, it means that there is a loss of momentum that is visible. Okay. Now, this is very contrary to what is happening in the Nifty index. The Nifty index is actually inching higher, okay, in terms of closing basis, if we see. But when we see this momentum ratio, that is the daily swing, that is actually going down. Now, this is indicating that this is a loss of momentum. Okay. Something similar we see in average swing as well, but average swing is a little more longer termish. It takes a little more time to play out, because ये जो swing है, that is the daily swing, okay, we smoothened it by an average. Okay, so this is a smoother version of swing, so it can take a little more time than the daily swing. Okay, so over here also in the past, you have seen that whenever it comes to 90 sort of levels, it starts rolling down. Okay, it starts rolling over and it leads to correction eventually. So, when we see the behavior in the counter trend rallies and when we see the behavior in its, rising trend, it's different, right? So at this point of time, it appears that this is a counter trend rally. So this is where we have to make our comparisons. And you can see that over here, basically the average swings peaks, okay? Then we see some cool off, and then again we see a rising trend in the Nifty index, right? Something similar we see over here as well, because the average swing topped out over here, then we saw some consolidation, and then again it has been rising higher, and now the swing is cooling off. So this is an early indication of momentum on the upside losing, right? So if that happens, then eventually there can be a correction. But like I said, for the Nifty index, especially we are waiting for a break below the 19,700 mark, because 19,700 mark is nothing but that's where this blue line is. Okay, and that's where we have made this low. Once that breaks, that will be a sign of weakness. Okay, so that is something that we are watching very closely. Now, other interesting part is that when we look at the 20-day average, right, that has hit the first overbought zone. Now, in the past, we have seen that, over here, basically the breadth peaks and then there is a cool off in the breadth. Okay, so now we are reaching that point for the Nifty index. Now it is, it is entirely possible that it can go towards the second line as well. Okay, but because many of the factors like Bank Nifty, small cap index, which we discussed, those all seems to be, cooling off or turning weak, there is a chance that this breadth indicator peaks somewhere over here and then it starts rolling over. Okay, and apart from that, many of the other the near-term indicators, like we have given in the diffusion indicator. So yeah, it is over here. So basically the percentage of stock above its 20-day average, that also peaked around this point. Okay, and now that the Nifty index is rising higher a bit, but then too the stocks are the momentum in the stocks is going down, because the stocks which are now trading above the 20-day average has now started to cool off. Okay, so this is again a bit of a warning sign, because we had seen somewhere over here as well, this ratio peaking, and then it rolled over and we saw a correction. So it happens each time, basically sometimes we get divergence, sometimes we get a correction straight away. Okay, but this is where, already the divergence have occurred, and we are seeing this, the percentage of stock above the 20-day line rolling over. Now, again, one more thing that works very well that we have noticed is that the percentage of stocks where the RMI is in buy. Okay, which means that the trend in those stocks are bullish, basically, because the momentum indicator is in buy mode. So over there also you can see that this number is now cooling off significantly, which means that over there as well the stocks are losing momentum. Now, this is basically, it kind of leads the fall, because when these ratios go down, it tells you that the momentum is losing. Okay, And then when the correction starts, these all indicators then eventually go towards this oversold zone. Basically, it will go towards the 20 or the 10 mark. So basically, when we try to combine the sentiments along with the setup, and when we look at the macro view, everything is telling us that we could be, at a very interesting point, and there is a turnaround that is possible on the downside. We have to wait for the cues and the levels to confirm. So yes, so that is it from my side. We basically need to be a little cautious. Okay, as of now, we don't have a signs of reversal, especially in the Nifty index, but there are all indications that it can roll over and the Nifty index can eventually give up. So this is something, I have tried my best to combine everything so that it starts making sense for the people.
Wonderful. And that's a lot of clarity with Strike. For those of you who haven't tried Strike as yet, I'm going to leave a link down on the description. Please go and get a sign up. It's a free trial right now, so you have the opportunity to experience this wonderful analytics tool that is our nation's most advanced data and analytics tool. And thank you very much, Jay, for the clarity. We had a great session. I'm going to see you next week. Take care of yourself, guys. Thank you so much.